Good morning. I'm Jabari Powell. I am your Learning Commons Specialist in the Business Applications area. And today we are going to be doing a bank reconciliation. Bank reconciliation is a simple process where we get the bank statement to match the cash account in your books. Okay. So starting with the bank reconciliation, we need to look at the events that happened in our book. And we see that we have deposits. 18,000, 7,000, 9,000, 5,800. In our bank statement, we have deposits of 7,000 and 9,000. So this 5,800 deposit needs to be input into our bank account. Okay. And when we look at our credits, we have the 10,000, 5,800, 490, 4,500, and 1,200. Here we have 10,000, 5,800, 490, 4,500. We still need $1,200 reduction. That's an outstanding check. Okay. And then if you look at the bank account and see what debits or credits are missing from your book account, you'll see that we have interest of 115. And we have an NSF check of $270, and we have a bank service charge of $75. Okay. So we go down to our bank reconciliation. It should look something like this. We start off with our balances. Our balances per the cash account. You see it right there, 18,210 for the. Okay, and if we scroll back, we can see that the balance for the book, for the bank account, is 13,380. Okay, so we start from there. We have 13,380. All right. So we have to add any deposits in transit. Deposits in transit are those deposits that we find on the debit of the cash account, but not in our deposit list on the bank statement. As we just identified, that is this $5,800 deposit. So we're going to go there down to bank reconciliation form and add in $5,800 in the deposit. Okay, we're going to go back. We're going to look at the books for anything else that we said we didn't have, which was this $1,200 outstanding check. That $1,200 outstanding check will reduce here. Okay. And we will come up with the totals at the end. All right. On the bank, we're going to look at any interest earned at $115. We're going to look to see if there was any EFTs received, which there were not. We had an NSF check that was $270. And we have a service charge of $75. These are reductions. We're going to total these up, and then I will give you the amounts. We have 13,380 balance for the bank. We add in 5,800. We subtract 1,200. That gives us an ending balance of $17,980. Same way with the book balance. We take our balance of 18,210. We add 115. We subtract 75. We subtract 270. And we have an ending balance of 17,980. As you can see, your balance is matched, which is our goal in the bank reconciliation. From there, we need to go ahead and prepare any journal entries required as a result of the bank reconciliation. We will find our journal entries are on the book side. So we need to have a journal entry for this, and for that. Okay, I'm going to label this A, B, and C as I do these journal entries. Okay. The journal entry for A, for the interest earned, is going to be recorded as a debit to cash and a credit to interest revenue. Okay, and that would be in the amount of $115 each. Okay, so that is a check code. The journal entry for the bank service charges. Okay, the debit will be for office expenses. Okay. And it will be a credit to cash. All right. All right. And these will be in the amount of $75. Okay. And then finally, we're going to do the non-sufficient funds check. A non-sufficient funds check means somebody wrote you a check that bounced. That means that somebody owes you money who was paying you off. So you need to make sure you make note of that person who owes you this money. Okay? And because there was a check that bounced, there was a check that you had recorded as cash, so you should reduce your cash account for that amount. All right? So that is the journal entries as required for the bank reconciliation. That is the bank reconciliation itself. You also have two additional questions. After the reconciliation journal entries are posted, what balance will be reflected in the cash account in the ledger? That amount is equal to your up-to-date cash balances. The only things that were missing from your cash balance were these entries. So now this is your new balance. And the last question. If the company also has $65 of petty cash on hand, which is recorded in a different account called petty cash on hand, what total amount of cash and cash equivalents should be reported on the balance sheet at the end of May? Well, we currently have $17,980 in our cash account. We have $65 in our petty cash on hand, and we just add those two up, and that will be the total, $18,045. If you have any questions, please leave them on the Facebook Live. Bob will be happy to pass them along, and I will be happy to answer them. Otherwise, I'll be back at the next section.